Alrighty, Alpha Hunters, hope you are having a terrific Tuesday because the market is having a terrific Tuesday. Wow. Nobody saw this coming. um, I mean, what a move on the market. And we can take a look here at pre-market here on the SPY real quick. You can see basically when it happened was right when we got CPI, right? Right when we got CPI, we got the big pop. So, very strong move there. A lot of it was done pre-market. We did gap up. How much did we gap up? It was like 1.25%, I believe, here on the SPY. 1.4% on a gap up. I didn't really mean to click off of that. So, 1.4% to the open, and then we actually did trade higher. Got up to 2.16 higher on the day. Very nice. Very nice new move here on the market. Not much else to really say about that. So CPI that we got this morning, that's what kind of drove the market before it opened in the pre-market. So we got inflation to come in at 3.2%, which was down from the forecast. The forecast is expected to be at 3.3%. That is what drove the market this morning. And you got core inflation even coming down a little bit too. Also come down to 4%. Forecast is calling for that to be at 4.1%. Very, very, very good for the market. It really was. So we're gonna run through all the things. What is moving? All the things that are moving, and just take a look here at the daily. This is not the best spot to be bullish. I would definitely just say you need to at least wait. We need to wait a couple days to see how some things set up. We were already pretty exhausted at the end of the day on Friday. Just be patient. Even if you are wanting to be bullish, all that, just be patient. Be patient. We were pretty extended here over the previous 2 weeks. Huge gap up today. Not exactly the best spot to be bullish. Okay, just be patient. If you were wanting to get in bullish, you'll get a much better spot probably on a pullback here over the next few days, maybe next week or two. But yeah, looking pretty good. The other thing you want to be patient about is we get PPI and retail sales tomorrow. So PPI might undo everything that maybe we did today. Just be a little bit cautious as this is pretty largely overextended. And if it, flips on the coin tomorrow, well, I mean, it can happen. So, and PPI is one that the Fed more closely watches anyways. So that might be a little bit more of a tell tomorrow. All right. So SPY looking pretty good. I mean, huge gap up, ran, first hour and a half of the day. And then it's slowly giving it back a little bit here. What's kind of interesting here is the Q's a little bit of a gap up. I mean, it had a pretty good gap up, but it hasn't run as much during the day. It really hasn't. You can see just taking a look at the SPY, and the Q's SPY ran pretty good there for the first hour and a half. The Q's actually only went bullish for about an hour and 15 minutes. So a little bit less time there. And what's kind of interesting is you got lower highs here. Kind of talking about that switch yesterday because we were seeing one divergence between the Qs and SPY between Friday and Monday highs, but we got one intraday this morning in that second hour of trading. So we'll see. I like seeing that kind of price action to be bearish or bullish on. Obviously, the bullish one you want to see like the market sell off, and you want to see the Qs make higher lows before the SPY kind of bottoms, right? You want to see the Qs make higher lows, SPY make lower lows. That would give you a pretty good indication to go bullish. So we've gotten two here back-to-back days. Obviously, we got an intraday one today, and we got a Friday, Monday highs between the Qs and SPY. There's a little bit of a divergence there. So it'd be kind of interesting to see what happens as we go into the rest of the week. IWM, though. Look at this thing. 4.75% on the day. It's a huge move. Almost a 3% gap. Actually, yeah, it's about a 3% gap up right there. So huge move there on the IWM. I would be willing to bet IWM has bottomed. Even if the market does roll over bearish in Q1 or whatever, I don't think the IWM takes out this low. It might have some struggle, whatever. It might pull back a good amount. I don't think it'll take out this low. And even if it does, it would be so short-lived, it would be insignificant. Yeah, I dig it, man. I dig it. Sometimes just patient, right? You know, all throughout this period, we're just saying, be patient, wait for it to come down to here. This is going to be a great spot. I really thought it would get down, though. I really thought it would get down to this line right here, 159, because that's where we had some previous kind of tops right there. But all we really did was snag these lows from 2022, and then that was it. It was it's been pretty good ever since. So looking really good. I think that IWM is going to be a much better opportunity. Which, let me look here real quick. How's this? So the Q's IWM, obviously last week, the IWM was getting wrecked last week. So it makes sense that the Q's IWM went a little bit higher, but you can see the IWM catching up pretty good today on this pair trade. I mean, I still dig this. And it looks like we're going to throw in, so far, halfway through the month, looks like we're going to throw a nice little upper wick there. We'll see. I mean, halfway through the month, I mean, that doesn't really mean anything. So we'll see how that goes. But yeah, you can just see, this is a weekly chart. You can just see last week the Qs just outperformed the IWM all week. So I'd be really interested to see how this ends for this week. Because the IWM has already moved 4.5% today. And I couldn't imagine them continuing to move up as strong, you know, and so that would be what happens with the Qs. So, and we're going to take a look at some stocks because there are some stocks out there that are, you know, big tech stocks not looking the best. DIA, nice gap up here on the DIA, the Dow Jones. Nice gap up as well. Yeah, kind of coming down from the highs. Okay, not a big deal. Get into a price level that obviously there would be some resistance here around 350. So, okay. But you're getting above this 340 level. Obviously, the past 2 days traded up through it, Friday, Monday. Obviously, clearly gapping up above it today. So this is going to be very interesting. This one might take a while to set up. Because if it comes down, you're going to get people buy the dip. Like, people are going to buy the dip off this 340 level. 342, that kind of area. So if it comes down, people are going to try and buy the dip. So it'd be interesting to see if it kind of just chops sideways in here between 340, 350. And if it kind of does do that, then maybe you're looking bullish. But I would want to see how this thing sets up. Maybe over the, you know, medium term here. If it breaks above 350, I think you're probably just picking it up on a pullback to 350 and then probably just going bullish. But I would want to see a pullback first, whether it's down to like 343, just kind of fill this gap, and then it goes higher. But that's just kind of my take on the DIA. But yeah, definitely getting through 340. That's a big time level. RSP also having a big day, up 2.66% here. Hey, look intraday, looking pretty good. Nice gap up and ran. Looks a lot better than the Qs. A lot more aggressive. Let's see. So it did gap up 1.66% ish. And then it traded higher all the way up to 3.18%. Wow, that's a pretty good day there. So that just tells you all the other stocks, not big tech, really leading in the S&P 500 today. Because the Qs, especially since the market opened, the Qs really haven't had the intraday price action. So we're going to check that out on sector rotation. Let's run through VIX. VIX is probably going to be getting crushed pretty good, I'd imagine. Not horribly bad, but definitely down pretty good. Definitely snagged the low from Friday. So, okay. So the VIX coming down pretty good there. See what happens tomorrow with PPI. So this is going to be the two areas that are really, really doing well for the market, for the stock market. Dollar is getting absolutely crushed off that news this morning. You can see here, 15-minute chart here, dropping off very sharply when we got CPI, and it's just continued to just drop off throughout the day. It's down 1.4%. It's a pretty monster move. The one caveat I will say, I mean, dollar just doesn't look good. I think we talked about that like last week or the week before, like with this breakdown that we did have back on November 3rd. Yeah, it just wasn't good. Just it did retest. I was a little concerning when we got Thursday's candle, but it just retested a little bit higher. But I mean, there you go. You get the follow through. Now, this level here, where it's getting into right now, I'm not gonna say it's gonna just straight bounce off of this, and then we're gonna continue to ride out here. I just think the dollar is done. I'm not saying it's going to go down to 100, but I mean that kind of a move. We had a breakdown, we had a retest, we had another breakdown, but we're coming into some pivot levels that it's probably going to respect in some time frame or another. I wouldn't want to just be outright bearish on the DXY here. I'd want to see something good set up. We got a pretty good setup last week into early part of this week, Monday. So that would be something you want to kind of see set up here. But yeah, it looks pretty good. Very nice breakdown there. It looks very good for equities. Gold then. So here's where, kind of been talking about with how bullish gold was during the month of October. It started to, as we got into November, even late, like really late October, it's gold GLD started really kind of underperforming, especially with some of those moves that the DXY was making, some of those big drop days. The DXY just, really dropping off, and gold wasn't as bullish, but that probably has a lot to do with it needs to kind of cool off from that huge move it had throughout the month of October. I would still expect GLD to probably come back down, retest a little bit lower. But I've mentioned this before. You get down to like 178. I think it's going to be more of a dip buy opportunity. 178 all the way down to probably, I'll say 174. I think those are going to be good dip buyers, probably to fill this gap, because once you break that, you're probably going to be coming down. Back down to this 168 level, but I don't think that happens. I really don't. I think you're gonna have some pretty good lows here. That's why I was saying just under that, maybe 174. These lows. I think you're looking pretty good here on gold. You're just gonna want a little bit further deep, a deeper pullback here, and then probably just gonna be in a buy zone. Jesus. All right, 10-year yield, man. All right. Very much looks like the dollar broke down pretty good from the Fed meeting on November 1st. So that Wednesday, Thursday, Friday definitely traded down. Looked like it was starting to base out here. But today on the 10-year yield, breaking below the lows that had kind of been put in over the past week, two weeks. Yeah, that's kind of a problem. So it basically seems like we're going to come at least down to the 4.3, 4.2 type area and check in with the highs that we had from a year ago. That clearly, it looks very positive that we do that. And then you can even make the case that maybe this is like a little bit of a head and shoulders kind of action. And now we're just breaking down that neckline maybe. So I would definitely expect yields to probably drop off. Now, one thing that's kind of interesting on yields, I just saw this here on the front page of Finance Yahoo. I don't really care to look at news too much early in the live stream, but investors have never been this confident bond yields are headed lower. Okay, stop talking. It's distracting me. But her paused face is also distracting me. But what's interesting here is whenever you see this kind of talk here that investors have never been this confident about anything. Whatever comes after that, it's almost an omen of like go the other direction of whatever the article is talking about. So very, very interesting. So FMS percent expected lower long-term rates. So I don't know if this is like a poll. I didn't really read the article. Maybe we'll read the article a little bit later on. But it's just, yeah, man, it's one that maybe, we see rates come down here over the medium term. And then, maybe over the next month to come check into the highs that we had last year. And then they kind of could start to consolidate and push higher. Kind of like how they did, at the beginning of this year. And then they started pushing higher. Because, it happens. That's just kind of the way it goes. But we'll have to see, and see if it starts to consolidate in between like 4.2 to 5%, 4.5 or 4.2 to 4.5, and then maybe it pushes higher later on. Who knows? But we'll see. 10 and 2 inversion. It's kind of interesting. Even though the 10-year yield's down as much as it is today, the 10 and 2 inversion is actually up a little bit. So the 2-year yield is dropping off even more than the 10-year, and there it is. It is dropping off pretty good. So if we start to see the 2-year really drop off here, yeah, we probably see that 10 and 2 inversion really start to spike up, and that's going to be the question: is does that indicate that there's some issue in the economy, and we're just going to see a short-term bump here on the stock market? And then we'll get the economic data down the line that indicates that the Fed, that the economy definitely has some issues. We'll see. We'll take it in strides. But for now, the market looks really good, really, really bullish today. A bit extended, just really bullish though. HYG, high yield corporate bonds, a nice flag pattern. Talked about this yesterday. Would have been a really good day to be bullish on that. Obviously, hindsight's 2020, I guess, but nice move higher here on HYG, the high yield corporate bonds. These bonds between the LQD, TLT have been the ones that have held up the most since last October. They've held up the best, I guess, not the most, but they've held up the best. LQD actually down from its open, so that's kind of interesting. TLT, how's the TLT doing? See, that's the thing, man. The TLT's also not moving all that much. It's up pretty good today, but it's down from its open, and it's like I don't know, man. That's just super weird. Maybe we're not done. Maybe we are just gonna consolidate here and then continue to push higher. But yeah, you can see the TLT, the LQD, just not as strong over the past year, kind of like the HYG has been. So let's check a look at that sector rotation for the day, because we're going to have some pretty good things to look at. So tech, probably going to be up pretty good with the gap. But I'm going to say without the gap, I'm going to imagine tech's probably not looking too good, because they weren't performing, or at least the Qs and AAPL wasn't performing all that great after the open. Are you going to load everything? Is that everything? Okay. So real estate, yes, I was talking with a buddy of mine this morning. We were kind of walking through doing a REIT position. So yeah, it makes sense. And that asset he was doing it on was up like 12.5%, I think, when we were looking at it. So it was crushing this morning. So yeah, real estate. And I would also, this is kind of the other thing I kind of told him. REITs are at a very, very attractive level. So I'm not going to say all of them, but a lot of them have been hit very hard over the past 2 years. And if you think yields and rates are going to be kind of coming down, REITs look really good. Really good. They've gotten hit. There's a lot of discounts out there. Utilities, discretionaries, materials. Okay, I like how like we have not pockets of sectors like grouped together on performance on the day. That's gonna, man, we don't see it like that very often. That's kind of weird. And then kind of performing kind of in line with the market. We got industrials, financials, communications, and tech. Okay. We also got materials, healthcare, and energies underperforming. All right. So I'm gonna take out the gap and yeah, with a little bit more scrambled eggs. So we got materials is leading the way. Utilities also outperforming pretty good. REITs intraday looking pretty good. Definitely REITs looking pretty good here over the past hour. Looking really solid. Industrials and discretionary is a little bit outperforming there. Financials underperforming just barely. Healthcare, tech, materials, energies, and communications. So that makes sense. Tech and communications. And as we go look through stocks, I'll kind of show you what I was what I was talking about. But yeah, there we go. Sector rotation for the day, looking pretty solid there. So.